Like I said, I'm clicking, it's called Coin Market Cap. Done. We all need to have it on our phones. We got to mention that it's a general platform where we get to, there are certain things here that in our advanced class we are going to be using. For example, I want you to look at the top, if I go into tokenomics, the top right, we can see something called fear and greed index. The market is almost at a neutral level. These are the things that tell us when to enter the market. You know, in the more advanced sessions, we are going to deal with that. So I want to give you an example of how to to make millions. Just a little tip here. I'm going to click this. You see, this is a chart. I'm going to click all time. You want to be buying crypto when this chart is in these red zones. You can see it's divided into orange, yellow, light green, dark green. If it's in, you see, it's fluctuating. Let me go here. The red is called extreme fear. The orange is called fear. The yellow is called neutral, which around the area we're in right now. The light green is a bit neutral, but a little greed. The extreme greed is at the top. Anytime the crypto market is showing extreme greed, you are going to sell maybe your long-term investments, or I said never sell your Bitcoin, so you can leave that. But you can sell your trades, or better still, as I will teach you in the more advanced sessions, you are going to short the market. Short the market is you make money when the market goes down with leverage. It's an advanced concept that we are going to get into, but just know that you can make money when the market is going down, when the market is going up. In the crypto space, this is just an aside, you don't have to be praying for the market to go up every day. We don't care where the market is. We are not in love with the market going up. We can make money when it's going down, when it's going up. In fact, when you start seeing it on greed, extreme greed, and everybody is calling their grandmothers to come and buy Bitcoin, to come and buy crypto, we know that, and we check here, and some other things I will show us. We will now see that, oh, the market is in extreme greed. We simply carry a money that is reasonable to us and short the market. That concept, I just want to introduce it to us, but it's in the more advanced session. Now, we're going back to tokenomics. I'm going to use Bitcoin again as a case study for tokenomics. Tokenomics is a bit complex, so just please bear with me, but I will try my best to break it down. Tokenomics is what you see: max supply, fully diluted market cap, circulating supply, total supply. Now, if a coin we don't buy coins because the coin is $10. For example, one thing that is common with beginners, when they want to buy crypto, they say Bitcoin is too high. The price of Bitcoin is too high. It's already over $100,000. You can see on the screen, Bitcoin is $105,000. So the price is high. I want to go for the small one. I want to go for the one that is $0.2. That is the way beginners talk. That is a wrong understanding of tokenomics. Now, the price is not set in a vacuum. You can't just call, we are not really after price here. We are looking at good tokenomics. Maximum supply. Like I said, Bitcoin has only 21 million Bitcoins that exist and will ever exist. There are only 21 million Bitcoins that will ever exist. So that's a good tokenomics. That they cannot print more is very important to us. If they can print more, guess what? You are their exit liquidity. They simply print more for themselves and they go away with your money. Just like our Naira. The central banks, they print more money. They devalue our currency, but they enrich themselves. If, for example, a billionaire like Dangote needs a loan of 50 billion, 100 billion Naira, and the central bank can just, okay, let's print it out from thin air. We print it out and we give him. That devalues our currency. I mean, you guys have seen Naira for decades. It is down whatever, and even the dollars that people think is safe, if you are more advanced in investments and all that, you will know that since 1971, the US dollar has lost about close to 80% now of its value. Since 1971, what happened, the history of that is the US dollar used to be pegged to gold. A president called President Nixon came and removed the peg, meaning that a dollar is worth a dollar because you and I agree that it's a dollar. Before, that was not so. A dollar was worth a dollar because it was like a receipt for the amount of gold that you have. That's just the simple concept about that. Then let's go to circulating supply. As at now, there is 19.8 million Bitcoin in circulation. The 21 million Bitcoin, all of it is not in supply yet. It unlocks over time, but we shall know that they cannot print more. That's what is called circulating supply. That then total supply. Now, this doesn't really apply to Bitcoin because Bitcoin was not designed to function like this, but I'll go ahead to explain it. What total supply means is that now sometimes when people launch a coin, like the Trump meme coin that I showed us earlier, they don't release all of the coin at once. They can always print more sometimes, but they don't usually release all of the coins. What they do is they unlock the coin bit by bit. Even though they have the ability to print more, they unlock it bit by bit so that you get soaked with the hype about the coin. So when they unlock it bit by bit, total supply now means the crypto that they locked plus what is in circulation is called total supply. Whatever means they locked the crypto and the crypto in circulation, that's called total supply. The addition of the two is called total supply. Sorry, I know this sounds a bit complex, but we need to get it. In more advanced sessions, we are going to use this information. I'm in coaching you one-on-one. I'm going to be able to break this down in a way that you can understand it more and more. Fully diluted market cap. If you multiply the circulating supply by the price, you are going to get this market cap, that $2.09 trillion. Then it's mass, but let me leave it at that. I don't want to complicate things for us. We are just starting. Like I said, I know a lot of us here are beginners, but this is kind of tokenomics. So when we are analyzing a crypto, whether to go into it, one thing I want to leave you with in this part is that we want to know whether the project can print more. If they can print more, we don't really want to be in that coin. Another thing we look out for is now these people have done it in a way, something called crypto emission, that they unlock it bit by bit. They want us to love the project, then they get to dump on us over time. We don't really want to be in such project. I showed us an example of Trump just now. Trump is a classic example of that, of this. You can clearly see that they only gave 10% to the general public. We can't be foolish enough to put our money there knowing that we are simply going to generate exit liquidity. Exit liquidity means the rich people need to sell to someone. If you buy those coins that have poor tokenomics, you are going to beat their exit liquidity. With that, I will leave tokenomics. We are going to